Okay, very good morning, all of you. So, very happy to see you all once again. God has given this beautiful day. Okay, so see, these many things are yet to be completed. Okay, out of these things, see, I'm going to touch this IFOS today. Okay, set off and carry forward clubbing. This also, I will give you a basic idea about this. Okay, we are not supposed to get into details of these chapters because these chapters are easy chapters. Okay, we are just after IFOS. This exempt incomes I have covered with different chapters. In between there are some exempt incomes. For example, in salary we have covered many exempt incomes. In IFOS also few exempt incomes we are going to see. In capital gains also few exempt incomes we have seen. So there is one for these all chapters I'll be providing you handwritten notes. Okay, those handwritten notes will cover everything, no need to go beyond that. Okay, everything will be there, and these chapters are very easy chapters. Okay, so today my target is we'll complete IFOS. I will give you an idea about this exempt income before the break which we are supposed to do. Okay, and then agricultural income. So there is a concept of partial integration in agricultural income which I have to guide you for. Okay, then this clubbing and this set of these two chapters we will cover with computation of total income. So after the break, what we are going to start with? We are going to start with deduction and computation of total income. Yes or no? So deductions and all, one by one the deductions I will teach you, and then you will go home, then you will study. Instead of that, we will directly see all the deductions in the computation of total income questions only. Okay, so my target will be to start with computation of total income questions, so that these things which we are not touching, number one set off and carry forward, clubbing and deductions. The theory part we are not touching. Don't worry about that. Everything will get covered in the computation of total income question. Okay, wherever explanation will be required, that time explanation will be given at the time of solving the question only. Okay, now we are not supposed to waste our time for these small things. That is what I feel. Okay, then AMT, alternate minimum tax. This alternate minimum tax will be covered with computation of total income question only. There are 2-3 questions in which this concept is there that we are going to discuss. And this 115 BSc, believe it or not, we have completed this. Why? Because with the chapters only we are doing that, what thing will be allowed under 115 BSc, what thing will not be allowed with 115 BSc. Okay, no, so this thing is already taken care of. Okay, now as far as advanced tax is there, less important chapter, so only the theory part is there. That notes I will provide. In that you are supposed to read those notes. Advanced tax is not that important for your exams. Okay, now ROI, this is entirely a theory chapter. Okay, I will mark those sections which you are supposed to read for exams. Okay, I will tell you in which section what is there, so that while you are reading, at least you are aware that what are you reading. Okay, and then this TDS and TCS, few important sections I will discuss, and few important sections I'll give you to read. Because in TDS, who is the payer, who is the payee, what is the payment, what rate of tax is there, and when the TDS is not deducted, meaning the threshold. For this I am not supposed to waste time. Okay, so today we are going to start with IFOS. Let's begin. Yes or no? Ready? Okay, income from other sources. How many sources of income are there? 5 sources, no? Very good. Sources are multiple, heads are 5. This is the last and residuary head. How many sections are to be done? 56, 57, 58, 59 and section 145. Do you remember section 145? Method of accounting. I had told you while doing the PGBP head. If you remember, both the heads, PGBP as well as IFOS, both the heads, PGBP as well as IFOS, needs to be computed on mercantile basis or cash basis. The method of accounting which is regularly followed to maintain your books of accounts. So the method which you are following to maintain your books of account regularly, the method which you are following, by following that same method, you are supposed to compute your PGBP, you are supposed to compute your IFOS. Meaning under this head, all the incomes of this year, all the IFOS income of this year will be taxable in this year, whether you have received or it is still receivable. Hello? All the IFOS deductions for this year will be allowed as a deduction in this year, whether you have actually paid or they are still payable, if you regularly follow mercantile system of accounting. But if you follow cash system of accounting, then under the head IFOS, what are you going to do? All the IFOS income actually received in this year will be taxable in this year, whether for this year or any earlier year, will not make any difference. All the IFOS payments, IFOS expenses actually paid in this year will be allowed as a deduction in this year, whether that expense relates to this year or any other year, will not make any difference. So the IFOS will also be computed on what basis? Cash basis. Okay, so it can be calculated on cash basis also, it can be calculated on mercantile basis. This is given in section 145. But there are three exceptions. Number one, dividend income. Which income? Dividend income. Number two, advance money received. Advance money received and forfeited. Do you remember yesterday only we have done this advance money received and forfeited under the head capital gains. Okay. And the third one is interest on compensation or enhanced compensation Interest on compensation or enhanced compensation on compulsory acquisition of what? Of capital asset. So these three incomes are there. Which are exceptions. What did I say? Which are exceptions to your method of accounting concept. Now these three incomes will not be taxable under the head IFOS based on method of accounting. Based on all the incomes will be taxable based on method of accounting, but these three incomes will not be taxable based on method of accounting. Dividend income will be taxable as per section 8. Advance money received and forfeited will be taxable on what basis? Receipt basis only. Interest on compensation will also be taxable on receipt basis only. So method of accounting will not affect the taxability of these three incomes. Yes or no? So will you remember these three incomes? Yes or no? Now, first section of any head, section 56. No need to write. It is there in the notes. Don't worry. It is there in the notes. I'll show you. Wait. See. Last page. Section 145. Income under the head IFOS to be computed on the basis of method of accounting regularly followed by the assessee, whether mercantile or cash system. However, method of accounting is not relevant for the purpose of chargeability of following income: dividend income, interest on compensation, and advance money received and forfeited. This is already there in my notes. Whatever I'll be speaking will be always in my notes. Don't worry about that. Okay. Now let's come to the first section. First section is section 56, charging section. Section 57. Second section is deductions. Which deductions are available under the head IFOS? Third section 58, disallowances. Which are those things which will be disallowed while computing your IFOS income? And last one 59. 50 talks about. Now tell me one simple thing. Have we done PGBP in detail? All the deductions of PGBP we know. Hello? Copy, paste. Section 57 done. Yes. Have we done PGBP? Yes or no? Have we done the disallowances under PGBP? 58 is done. Copy, paste, not a single difference. So now listen to me very carefully. All those expenses which are allowed while computing your PGBP income. Similar type of expenses if you incur to on your IFOS income will also be allowed as a deduction under section 57. So if you incur some expenses to earn IFOS income, if you incur some expenses to earn IFOS income and that expense is revenue in nature, which type? Revenue in nature, not capital, not meaning the cost of asset will not be allowed directly. But remember, the depreciation on that cost can still be claimed under the head IFOS, just like the way we used to claim under PGBP. So any expenditure which is of revenue nature, any expenditure which is of revenue nature, which is wholly and exclusively incurred to earn your IFOS income, will also be allowed as a deduction under the head IFOS. This is your section 57. Okay. 58. All the disallowances, which usually you cover under PGBP head. For example, payment for an expense more than 10,000, more than in a day to a person by way of modes other than prescribed modes, disallowed under PGBP. Same to same disallowance you can apply here also under the head IFOS. Do you remember, if any excess amount I pay to my related parties, excess amount paid to related parties will be disallowed while computing your PGBP income. Same to same disallowance you can bring here under the head IFOS. So there are no separate deduction and separate disallowances which are given under IFOS. Section 57 speaks that whatever expenses which you normally could claim under the head PGBP, same type of deductions you can claim under the head IFOS. Whatever disallowances which are applicable for PGBP head, same type of disallowances will be applicable while computing your income under the head IFOS. 57 and 58, both the sections are done. Both the sections are done. Now 59. 59 talks about now deemed incomes. Have you done PGBP? Section 41. Section talks about deemed PGBP income. Any expense, any loss, any liability. What did I say? Any expense, any loss, any liability for which the deduction was allowed under the head PGBP. If any recovery is made against that, if any benefit is received against that, that recovery or benefit will be treated as deemed PGBP income. Yes or no? Under section 41. Same to same copy paste for section 59 also. Any expense, any loss or any liability, any expense, any loss or any liability for which the deduction was allowed under the Income Tax Act, except PGBP head, and against that loss, against that liability, against that expense, if any recovery is made later on, if any benefit is received later on, then that recovery or that benefit will also be treated as your deemed income, taxable under the head IFOS. So have you claimed any deduction for expense under the Income Tax Act? For example, under section 80C, you get the deduction for life insurance premium. You get the deduction for, so life insurance premium is your expense for which you have got the deduction under the Income Tax Act, other than PGBP provision, other than. Now if that life insurance policy is surrendered within 2 years, within 2 years from its commencement, or you stop paying the premiums within 2 years, then whatever premiums which were allowed under section 80C in earlier years will be deemed as your income under the head IFOS as per section 59. Yes or no? So any expense, any loss, any liability for which you got the deduction, for which you got the under the provisions of Income Tax Act, other than PGBP, against that loss, against that liability, against that expense, if any recovery is made or any benefit is received, that recovery or benefit will also be treated as your income, deemed income, taxable under the head IFOS. Yes or no? Yes or no? Now pay attention. Whatever I have spoken in front of you, I will show you. Now, okay. This section 145, I have already covered. Yes or no? Read this section 59. The provisions of section 41(1) deemed PGBP income as applicable under the head PGBP are also made applicable so far as may be to compute the income under the head IFOS. Accordingly, where a deduction has been allowed under the provisions of Income Tax Act in respect of any loss, expenditure or liability, and subsequently any amount is received or any benefit is derived in respect of such loss, expenditure or liability, then the amount so received or the benefit so derived shall be deemed to be the income of the previous year in which the amount is received or benefit is derived under section 59. 59 is done. Hello, did I teach you 58 also? 58 also done and 57 also done. Let's see what 58 says. Section 58. Amounts, meaning disallowances, meaning under the head IFOS, what all things will be disallowed? Any personal expense. We did not claim personal expense under PGBP head also. So here also there will be no deduction for personal expenses. Yes or no? Which expense we used to claim? Only those expenses which were wholly and exclusively incurred to earn your PGBP income. Yes or no? No personal expense will be allowed as a deduction. So here also no personal expense will be allowed as a deduction. Then any interest payable outside India on which no TDS is deducted or TDS is deducted, but don't you remember this kind of disallowance we had in PGBP also? 30% of the amount, if the payment is made to resident, will be disallowed. That same disallowance is here. See, yes, any salary payable outside India on which no TDS is deducted or TDS is deducted but not deposited. This same disallowance we saw, same disallowance we saw, same disallowance we have seen. Yes or no? In PGBP head also. Any payment made to relatives or associated concern in excess of reasonable amount. This we saw in 40A2. Next one, any payment or aggregate of payment exceeding rupees 10,000 made to a person in a day, otherwise than by prescribed modes, will also be disallowed. 30% of the expenditure shall not be allowed in respect of sum which is payable to any resident and on which TDS is deductible but not deducted or TDS is deducted but not deposited. Yes or no? Next one, any expenditure or allowance in connection with winnings income. In connection with this I am going to cover with your winnings income. No need to worry about this also. And other disallowances. What did I say? As mentioned under the head PGBP are also made applicable under the head IFOS so far as may be to compute the income under the head section 58. Done. Did I speak something else or the same thing? Okay, so I'm not rushing for anything. Don't worry about this. Okay, this is the last lecture. Oh, how many things he will cover? He said that he is not going to cover this and that. Don't worry. I'm here and I'm there to cover each and everything. You will not face any difficulty. Trust me on that. Yes or no? So 50 section 59, whatever I spoke is there. 58, whatever I spoke is there. In 57 also you will get the same thing. 57. Now pay attention, very important thing, very important. Section 57, all the expenses, all the deductions under the head PGBP were under different section. 30, 31, 32, 35. There were different expenses and different items for which the deductions were allowed under the head PGBP. All those things were covered under different sections. There were too many sections. Here, only one section is sufficient. All the expenses, all the items, you will claim under this single section. Section 57. Section 57. So whatever IFOS income you are earning, whatever IFOS income you are earning, to earn that income, wholly and exclusively, any expenditure is incurred. And that expenditure should be of revenue nature. That expenditure should be of, shall be fully allowed as a deduction under the head IFOS. Under section 57. Now pay attention. Will you get any deduction for any capital expenditure? Do you get any deduction for capital expenditure under PGBP head? No. But that capital expenditure is allowed in small parts in the form of depreciation. Yes or no? Copy, paste. Capital expenditure incurred to earn IFOS income. What did I say? Capital expenditure incurred to earn IFOS income. Any asset you have acquired to earn IFOS income. The cost of that asset will not be allowed under the head IFOS. But that will be allowed in small part in the form of depreciation. Under section? No. 57. It was allowed under section 32 under the head PGBP, but under the head IFOS it will be allowed under section 57 only. Will you remember? So now under the head IFOS, what did I say? Under the head IFOS, section 57. I am giving you summary. Pay attention. There will be some incomes which are exempt income. There will be some incomes which are exempt incomes. So to earn any exempt income, any expenditure is incurred. Expenditure is incurred in connection with earning. Income we have forgot. Expense you forget. Did we charge tax on your income? So to earn that income which is exempt income, you might have incurred some expense. We have forgotten your income, you forget your expense. Did we charge tax on your income? So don't claim the deduction for expense which you have incurred to earn exempt incomes. Yes or no? So any exempt incomes, to earn these exempt incomes, if you incur some expenditure, what will you do with this expenditure? Will you consider this expenditure, claim the deduction, or you will ignore that expenditure? Ignore that expenditure. That is not to be allowed as a deduction. Yes or no? Now, there are some incomes under this head. Against which you get standard deduction. There are two incomes. Number one, interest on compensation, or enhanced compensation on compulsory acquisition of a capital asset under any law. So your capital asset is compulsorily acquired. So for that compulsory acquisition, you are going to get what? Compensation or enhanced compensation. Will you get it on time, or there will be delay? So because of that delay, the government will also pay you. The authorities will also pay you interest. So that interest which you are receiving on what? Compensation or enhanced compensation. That interest. Oh. Huh? What has happened to this? Wait, huh? This is working. This is not working. Now it is working. What to do with this? Open preview projector. Very good. Okay. Now, you have trained me well, Surya. I have learned. Okay. Now tell me. So the income is interest income. Interest on compensation or enhanced compensation. Will it be taxable under the head IFOS? Yes. So it will be taxable under the head IFOS. Against that you get standard deduction. Under section 57, you will get a standard deduction from this income. 50% of that interest income will be allowed as a deduction, standard deduction. Balance 50% will only be taxable. So if the income is eligible to get what? Standard deduction, against that income, if any expenditure is incurred, you have to forget that expenditure also. If you remember, this same logic I told you for house property income also. Hello? From house property income, you used to get 30% standard deduction. Yes or no? So any expenditure related to house property, you used to consider or you used to ignore? Ignore here also. One more income is there under the head IFOS. Family pension. Which pension? Family pension. So if an employee has died, that poor fellow has died, and after his death, his employer gives pension to his family members. So family members are receiving what? Pension. So for those family members, that pension is taxable under the head IFOS. Taxable under the head. So against that family pension, they will get standard deduction under section 57. Under section, how much is the standard deduction, you know? 1/3 of family pension received or maximum 15,000 rupees. 1/3 of family pension received or maximum, whichever is lower, whichever is. But if you follow 115 BSc, if you follow, will you get standard deduction? Yes. Still you will get standard deduction, but the maximum amount of standard deduction will now be 25,000. Will be. So do you get standard deduction from family pension? Yes. So any expenditure which you incur to earn family pension will also be ignored. Two incomes you will keep in mind. One, interest on compensation. Number two, family pension. Against these two incomes, you will get standard deduction under section 57. You will get standard deduction under section. So any expenditure incurred to earn this income, against which standard deduction is allowed. Yes or no? Even that expenditure needs to be ignored, because against that income you get what? Standard deduction. Forget about the expenditures. Yes or no? Now under this head, winnings income is also taxable. Under this head, winnings income is also taxable. Winnings from horse race, lottery winnings, card games, etc. Yes or no? So to earn that winnings income, you might have incurred some expenses. You might have incurred some, like cost of lottery tickets. Betting is done, so you might have bought the tickets, etc. Yes or no? Gambling is done. So any expenditure which you incur to earn winnings income, like cost of lottery tickets, etc., will not be allowed as a, there is a specific disallowance. If you check point number 7, check any expenditure or allowance in connection with shall be allowed or shall not be allowed. So if winnings income is getting taxable here, so to earn this winnings income, any expenditure is incurred, will that expenditure be considered or it will be ignored? It will be ignored. Yes or no? That expenditure will not be allowed as a deduction. There is a specific disallowance under section 58. Now tell me, other than these three incomes, all other incomes under the head IFOS, all other taxable income under the head IFOS, for earning those incomes which are taxable under the head IFOS, if any expenditure is incurred, if any expenditure is incurred, that expenditure should be revenue in nature and wholly and exclusively incurred to earn these income, then that expenditure will be considered and will be allowed as a deduction under section 57. Under section, will you remember this? This is the summary of section 57. This is the summary of section 57. Done, sir? Hello? Now, which incomes will be taxable under the head IFOS? Only this you are supposed to keep in mind. Which incomes will be taxable? Sir, for that we'll have to check charging section. Which section? Charging section. And charging section is section 56. So frankly speaking, whatever content is there in this chapter, no, is about the charging section only. this income will be taxed, this income will be taxed, this income will be taxed. But while taxing, keep this thing in mind. While taxing this income, keep this thing in mind. Only this discussion we are supposed to do. Yes or no? One of the most easiest head and one of the most, one of the head which is, given a stepmotherly treatment by students. Because before, preparing for your exams, you usually consider this head, no, not that important, not that important. This is one of the most important heads. Why? Because in any question, with any question, the information of IFOS can be clubbed very easily. And if you don't do all these things properly, what will happen? At the end of the day, you are going to lose marks because you don't know the taxability and you don't know the points, important points while taxing the incomes under the head IFOS. Yes or no? So did you understand section 57, 58, 59 and 145? Now only one section is remaining. Which section? 56. So now this section 56 talks about charge. Salary head. What was the charging section? 15. Employer-employee relationship. Any sum by whatever name called, hello, will be treated as salary, whether in cash or in kind, and will be taxable under the head salary on due or receipt, whichever is earlier basis. Section 22 for house property. 3 conditions. Number 1, there has to be a house property. Assessee should be owner of that house property. That house property shall not be used by the assessee for his own business or profession. Then calculate the annual value of that property. That annual value will be charged. How to calculate that annual value and all? We saw. Okay. PGBP. Section 28. 2 types of charge. 2 types of general charge, specific charge. Because of general charge, any profit or gain arising to the assessee because of any business or profession carried on by the assessee at any time during the previous year, that profit or gain will be your income, taxable under the head PGBP. Other than that, there was list of incomes, compensation on termination, modification of managing agent contract, then contract of agency or vesting of management of any property or asset to the government, then perquisites in the course of business or profession, then fair market value of the asset, stock in trade as on the date of conversion, amount received on sale of asset whose entire cost was allowed under section 35AD. Those incomes were given in specific charge. If you see any of those incomes, you are supposed to charge under the head PGBP only. Then we go to capital gain head. Which head? 2 type of charge there also. General charge, specific charge. Any profit or gain arising on transfer of a capital asset will be taxable under the head capital gain in the year in which the capital asset was transferred. Not just this profit or gain. Under the head capital gain, specific charge was also there. Some specific type of profit or gain will also be taxable under the head capital gain. Profit or gain arising on receipt of insurance claim. Hello. Profit or gain arising on compulsory acquisition. Profit or gain on conversion of a capital asset into stock in trade. Those profits and gains are also specifically taxable under the head. Likewise, there are 2 charges. 2 types of charge under the head general, specific. General, if you are earning any income, that income is not an exempt income, meaning the income is a taxable income. There is no exemption for this income, yes or no? And that income could not be taxed under any of the earlier 4 heads of income. Most welcome. That income will be taxable under the head IFOS, general charge. Which charge? So, section 56, subsection 1. 56 subsection talks about an income shall be charged to tax under this head if such income is not exempt as per the provisions of Income Tax Act and it is not taxable under any of the 4 heads of income. Then please bring that income and charge that income under the head IFOS. This is what your general charging section says. Can I say this head is a dustbin? This head is a whatever you cannot classify under the earlier 4 heads of income, classify those incomes under the head IFOS. Yes or no? But wait, we are giving you a list. We are giving you a list of certain specific incomes. Those incomes will always be taxable under the head specific charge. 56 subsection 2. 56 subsection 2 talks about specific charge. There are some incomes. 56 subsection 2 clause 1 is there, clause 1b is there, clause 1c is there, clause 1d is there. Then 56 subsection 2 clause 2 is there, clause 4 is there, clause 10 is there. There are many clauses, meaning there are many incomes, few incomes. List is given. So under section 56 subsection 2 there are some incomes which are prescribed. Those incomes will be specifically taxable under the head IFOS only. Those incomes cannot go to any other head. Those incomes cannot go to any. So which are those incomes? Which are those incomes? First one is, please check 56 to clause 1. First one is dividend income. Then, wait. Second one is winnings income. Second one is after winnings. This income I have already covered under the head PGBP. Believe it or not, I have already covered. I told you in the PGBP that I am not going to discuss this under the head IFOS. You are deducting some amount from your employee's salary as his contribution. PF contribution, ESIC contribution, pension fund contribution to different staff welfare funds and schemes. That contribution of the employee will be deducted from his salary. First of all, that contribution which you are deducting will be treated as your income. And on or before the due date of that fund, on or before the due date of that scheme, if you deposit that amount in the employee's fund, then that amount will be allowed as a deduction under the head PGBP. 36(1)(5)(a). 36(1). Same to same. If you are an assessee, you have some employees, but you are not engaged in any business or profession. Assessee is not doing any business or profession, but he can have employees also. For example, colleges are there, local authorities are there, yes or no, big universities are there. They are not doing any business or profession, but they will have employees. So what the assessee will do, what the college, university, local authority will do, they will deduct some amount from the salary of their employees. The moment the amount is deducted, that will be treated as income. That will be treated as their income. And now it cannot be taxable under the head PGBP because the amount is not deducted in the course of business or profession. Why? Because the assessee is not doing any business or profession. Then that amount specific charge is there under section 56 to that amount will be treated as income, taxable under the head IFOS. This cannot be taxed under PGBP. Why? Because the assessee is not doing any business or profession. Yes or no? Now this income, this amount will be treated as income for the assessee, taxable under the head IFOS. And the amount which is taxable for you as IFOS, this was the amount deducted by you. Deposit that amount in the respective fund or respective scheme of the employee on or before the due date of such fund or scheme, statutory due date, if you remember. then for that amount you will get the deduction under the head IFOS, because the income is treated as income under the head IFOS. And if this income is deposited, this amount is deposited in the respective fund or scheme of the employee, the amount will be allowed as a deduction under section 57 under the head IFOS. This income I have already taught you. Again I have repeated. And if you will not remember, now it is your fault. Do you recollect that this kind of discussion we have already done under the head PGBP? Then can you please give me some response from your side in yes or no? Third income. First one is dividend. Second one is winnings. Third income, which will be taxable under the head IFOS, is amount deducted from employee's salary. Amount deducted from employee's salary. So one by one I am writing all these incomes. Please pay attention. First income, dividend income. Second income, winnings income. Third income, amount deducted from employee's salary as his contribution to various staff welfare scheme or funds like PF, ESIC and all. Yes or no? All these incomes are covered, but just I am creating a list so that you come to know out of this list which incomes we have already covered. Yes or no? So this income is already covered with PGBP. Okay. Now the third income. After the third income, fourth income is rental income. Fourth income is interest income. Interest income. Can you see this income, this interest income, and this interest income? Out of this, I have already spoken about this interest multiple times. Today also I have spoken, yesterday also I have spoken about this income. Interest on compensation or enhanced compensation. Now there is one interest on securities. Now pay attention, this third income which we have discussed, this income will be taxable under the head IFOS if not taxable under the head PGBP, only then this income will be brought under the head IFOS. Okay. Now the fourth income is interest on securities. Now the securities on this securities like bonds, debentures, government securities are there. This will not include shares. Why? Because on shares you don't get interest. On shares you get dividend, which is already covered in point number 1. So I am talking about those securities which is other than shares, like bonds are there, debentures are there, government securities are there. So you might have invested in securities. So on those securities, will you get interest? Yes or no? That interest will be taxable under the head. Only if it is not taxable under the head PGBP. So first you will have to try and charge this income under the head PGBP. If this income cannot be charged under the head PGBP, bring that income under the head IFOS. So can I say if not taxable under the head PGBP, then this interest income will be taxable under the head IFOS. Fifth is also interest. Fifth is also interest on compensation or enhanced compensation. Enhanced compensation on compulsory acquisition of what? Capital asset under any law. This will also be taxable under IFOS head. But you have to remember one thing, that from here you get standard deduction at the rate of 50% of such income, Now pay attention, We are looking at the list. In this list is given under which section? Tell me. This list is given under which section? 56, subsection 2. So can I say this is your section 56 2, which talks about incomes taxable under the head IFOS only. This income cannot be taxed under any other head. These incomes will be taxable only under the head IFOS. So first income dividend, second income winnings, third income amount deducted from employee's salary, fourth is interest on securities, fifth is interest on compensation or enhanced compensation. Now when I go and check these two interests, this interest and this interest is taxable under the head IFOS, So along with this, one more interest I will cover. That interest will also be taxable under the head IFOS, but not because of specific charge, because of general charge. So we are covering the list of specific charge incomes only. Hello sir. We are covering the incomes which are covered in specific charge. Along with that, one more similar type of income we will cover. Which is taxable under the head IFOS only, but not because of specific charge, because of general charge. So if you can see this list, this is 1, this is 2. Taxable because of specific charge. Taxable because of, can you see this interest? Tell me. Interest on loans or advances given by you, or interest on any deposits. That interest which you receive on loans or advances, or the interest on deposits, is it your income? Yes. Is it covered by specific charge? No. Is it covered by specific charge? No. Specific charge covers only this interest and this interest. This interest is not covered by specific charge. Still this interest will be taxable under the head IFOS. Why? It is your income. Yes. Exempt? No. Can you charge under any of the earlier 4 heads? No. So as per general charge, this interest will be taxable under the head. So whenever you see this interest, charge it under the head. So what I am going to do? 10 note. 10 note. What note? Interest on what? Loans or advances, or interest on deposits will also be covered under the head IFOS. This will also be taxable, but this is taxable as per 56(1). 56(1). Color, green color, anything which I will write with green color will be taxable under this head. But not because of specific charge, because of general charge. Color, black color, anything which I will write with black color will be taxable under the head IFOS, not because of general charge, because specific charge is there. Yes or no? And color, pink color, whatever I will be writing with pink color will be exempt. So there is one note, again one note. Wait, along with this I will cover one more interest over here. Color, green color, one interest, another interest. Now interest on income tax refund. Interest on income tax refund. Sometimes you get income tax refund also. Sometimes you get income tax refund. If you have paid excess income tax, so the government will give you back your income tax in the form of refund. On that income tax refund also, interest is paid. Is it your income? Yes. Sir, this income tax refund, this is not your income. This is not your income. Why, sir? Because the amount of tax which you have paid extra is coming back to you is not your income. But on that, whatever interest you will receive, whatever interest you are going to receive, that interest is also taxable. That interest is also under the head IFOS as per general charge. Because it is your income. Is it exempt? No. Can it be taxable under any of the earlier four heads? No. Is it covered by specific charge? No. So it will be taxable under the head IFOS because of general charge. Will you remember? Now there will be some interest. Bloody, if you will charge those interest as a taxable income, you are gone. Because what income will be taxable here? What incomes will be taxable under the head IFOS? Whether the incomes are covered by specific charge or general charge. Under general charge, only those incomes will be considered which are not exempt, which are not and which cannot be taxed under the earlier four heads. What about those incomes which are exempt? What about those incomes? Will you charge those incomes under the head IFOS? Exempt incomes are not covered in specific charge, and exempt incomes cannot be taxed under the head IFOS because of general charge also. What income can be charged? Only the taxable income. Whether the taxable income is covered in specific charge or the taxable income is covered in general charge. Yes or no? Now, some interest you will receive. Some interest you will receive. Those interest cannot be taxed as per specific charge also, cannot be taxed as per general charge also. Why? Because those interests are exempt. Number one, interest on PPF. Interest on fully exempt as per 10 subsection 11. Interest on Sukanya Samriddhi account. Which account? Fully exempt under section 10(11)(a). And there are certain interests on notified securities, notified investments. Those interests are also fully exempt under section 10 subsection 15. So you cannot charge those interests also under the head specific charge. Cannot be covered in general charge. Cannot be covered under general charge also. So you'll have to exempt those interests. Exempt incomes, exempt interest cannot be taxed. So what I am going to do? See, we are covering interest income. Which income, guys? Some interest, color, black color, will be taxable under this head only, specific charge. Some interest, color, green color, will be taxable under the head IFOS because of general charge. Now color, pink color, some interest which will be exempt. Will you charge those interest under this head? Will you charge those interest under this head? Then under which head? Under no head. Because these interests are exempt, not to be considered to compute your total income, will not go under any of the heads. Yes or no? So, happy Diwali. Okay, this time someone else is. So, note. Color, pink color. Now, interest on what? Number one, PPF account. Number 2, Sukanya Samriddhi account. And number 3, interest on notified securities or investments. Now, this interest will be fully exempt under section 10(11). This interest will be fully exempt under section 10(11). This interest will also be fully exempt under section 10(11)(a). 10(11)(a). And this interest will be exempt under section 10 subsection 15. 10 subsection 15. But wait, there is one exception over here. Interest on post office savings account. Interest on will be exempt up to maximum 3,500 or maximum 7,000 or maximum 3,500 in case of individual account, and 7,000 in case of joint account. Will you remember this? Any other specified investment or notified investment or notified security other than on those investments, on those securities, whatever interest will come, full interest will be exempt. Will you remember this? See, I have covered this part, I have covered this part, I have covered this part, and now this also I have covered. Okay, sir. Now what are you going to do? Read this. That's it. Will you be able to do it? Yes or no? No. Next one. So, how many incomes we have covered? Color, black color. Again, I will come in the black color. Why? Because we are seeing the list of those incomes which are taxable only under the head IFOS. Number 1, dividend income. Number 2, winnings income. Number 3, see, the discussion about this income is over. I am not going to discuss it. Discussion about this income is also over. This income is also over. And discussion about the balance interest and this also over. Now you are just supposed to see this list of notified securities, list of notified investments. On that, whatever interest you are getting will be exempt. Please pay attention. This I have covered. And this also, and this. Okay. See this note 2, if you will see, then note 3 regarding specified securities or investment. Yes or no? Now, yes. Entire thing I have covered. Okay, income tax refund also I have covered. One important point you are supposed to remember here. See, whenever some interest is taxable, okay, whenever some interest is taxable, if an interest is taxable, if interest is taxable, so gross amount of interest, from that sometimes the TDS is also deducted, sometimes the TDS. So the payer who is giving you taxable interest, that payer will deduct the TDS also. So will he give you full amount of interest or net interest? So what you will do, under the head IFOS, this interest is taxable, point number 4, point number 5. And in the note, 2 interest we have covered, yes or no? So whatever interest which is getting taxed under the head IFOS. The gross amount of that interest, from that sometimes the TDS will also be deducted. After deducting TDS, you are going to get net interest. Under the head IFOS, will you tax net amount or gross amount? Will you tax net amount or gross amount? Apply the same logic. Under the head salary, if TDS is deducted, we charge the net salary or we charge the gross salary? Always the gross salary. Same logic here. Here also we'll charge the gross interest. So this gross interest, this amount will be taxable. Under the head taxable as income, under the head IFOS. What about this TDS which got deducted? For this you will get credit from your tax liability amount. So from your final tax liability amount, take the credit of this TDS. So if in the question net TDS is given, net interest is given, what are you going to do? Add TDS, make it gross, and gross amount will be taxable. And now in that gross amount, will you have you shown your TDS also as your income? Yes. Now later on, take the credit of that TDS from your final tax liability. Yes or no? Will you remember this? Wait. Now let's come to the next part. Can you see rental income? Can you see rental income? Guys, this rental income and this rental income, these two rental incomes are taxable only under the head IFOS because of specific charge. These two rental incomes are also taxable under the head IFOS, not because of general charge. This is also your income, but not exempted anywhere else. Not exempted and not taxable under any of the earlier four heads. So this rental income we are going to charge under the head IFOS only, but because of general charge. Will you remember? Have you studied your IFOS head like this earlier? Did you have any idea about all these things which I am speaking? Now, are you finding this thing easy or difficult? Easy or difficult? We are just seeing that which incomes are taxable, which incomes are not taxable, which incomes are taxable, which incomes are not taxable. That's it. We are supposed to remember only those things. Getting my point? And at the time of taxability, what things we are supposed to remember? If the TDS was deducted, add that TDS, make the amount gross, and gross amount will be taxable. These are few important points which you are supposed to keep in mind. Yes or no? Now, see, these two rent, I will write in which color? Black color. And these two I will write in? So, color, black color. Point number 6. Point number, because 5 we have already written, no? 6. Point number 6 will be rental income from letting out what? Plant, machinery or furniture. Yes, that's what. Rental income from letting out plant, machinery or copy and paste. If this rental income you want to charge under the head IFOS, make sure that it is not getting taxable under the head PGBP. If this rental income is charged under the head PGBP, then okay. But if this rental income you cannot charge under the head PGBP, it will always be taxable under the head IFOS. Rental income from plant, machinery or furniture. For example, I have one camera at my home. I have my personal asset. I had a hobby of photography. It remained as a hobby only. I never got an opportunity to do photography. Why? Full time I in the class only. I don't go out. Earlier, I thought that I will, roam around. I will do a backpacking solo trips and all. I will go to the jungle safari and all. So it was kind of dream for me when I was young. This is not a imaginary story. This is real, which I am telling you. Okay. So one of my good friends, he happens to be a photographer. So I was very much, influenced by his photography skills and all. So I always used to ask him that how do you do this? How do you click such beautiful pictures and all those? So I got fascinated. Without even learning the photography and all, that time I had good amount of money with myself. I bought a Sony camera worth 2 lakh rupees. Worth? Thinking out of fascination and out of excitement, I bought one camera, Sony camera, 2 lakh rupees. Thinking that I will get this opportunity to roam around and click pictures everywhere. That camera picked only one picture. Checking, yes. Whether the camera is working okay or not. Then from that day, the camera was in my cupboard. It never came out for the next 6 months. It was there only inside. Somewhere deep inside I was like, I have bought a camera, I will go somewhere. I have bought camera, I will go somewhere. But I could not go. So after 6 months, I realized that I have done some foolish thing. I have invested my 2 lakh rupees in a camera which I am not using anymore. And I don't remember that I'll ever be able to use this camera because of my schedule. Full day I'm in the lectures, I'm doing this, I'm doing that, I'm not getting any time. I cannot bring that camera in the class and start taking pictures of all of you, no? Yes or no? So, I took one wise decision at that time. I called my friend that, see, your business is clicking the photographs, okay, no? So in your business, this asset could be used. So can you buy this asset from me? Untouched. 2 lakh rupees was my cost, okay, you just give me 1 lakh 50 and take the asset from me. He said, no, I am not going to buy it from you. I said, buy no, my money is stuck here. I have invested my money, I want to liquidate that. He said, no, I will not buy it because I don't have that much money to buy, but still, I am in need of camera. I'll do one thing, I'll take that camera on rent from you. Ownership is still with me. Now since last 3 years, that camera is being used by my friend. And every month he pays me 2,500 for using that camera. Am I getting rent from any plant and machinery? Camera is nothing but plant and machinery under the Income Tax Act, yes or no? My business is not to earn such rental income. So can I charge this rental income from camera under the head PGBP? Welcome. Under the head IFOS, it will be taxable. Yes or no? But wait, I will twist this example. I have many cameras, lenses, cameras, webcams and all, and I have opened a shop. In that shop, I am keeping all of them in display, and outside my shop, I have put a board. Cameras available for creators, for film producers, for movie production houses. Cameras, high quality cameras are available for rent. My business is to give the cameras on rent. Now the rental income which I will be getting is rental income from plant and machinery. But I am in the business of giving these plant and machineries on rent. Now this rent will be going to PGBP. And if the rent gets taxable over there, then no need to bring here. Got it, sir? Now pay attention. One very important thing I am asking you. The amount which I spent to buy that camera, how much? Is it a revenue expenditure or a capital expenditure? Will I get any deduction for that? Whether the rent of camera getting taxable under the head PGBP or the rent of camera getting taxable under the head IFOS, I am not going to get the deduction for that capital expenditure, because that was the actual cost of my asset. Not even under the head PGBP, not even under the head IFOS. But will I get depreciation on that amount under the head from my income which I am taxing there? Yes or no? And the same thing I can do here also. The cost of that camera, that cost of that can be claimed as a deduction from this rental income under the head IFOS in the form of depreciation, to be calculated by applying the same method which I applied under the head PGBP. Opening, add, addition, less, deletion, whatever the balance amount is there, depreciable value, on that the rates are prescribed. Those prescribed rates I will apply and I will calculate the depreciation. That depreciation could have been claimed under the head PGBP. That same depreciation can be claimed under the head IFOS, but under section 57. Will you remember this? Hello. So now this was your income number 6. Now coming to income number 7. Again, rental income. Rental income from letting out. Letting out. Again, plant, comma, machinery or furniture along with building. Along with, sir, building and letting off both assets, meaning building and other assets. Both assets. Letting off both assets was inseparable. Then, if it is not taxable under the head PGBP, it will be taxable under the head IFOS. If you remember house property head which I taught you, you will immediately remember this thing. I talked about combined rent. Letting of building along with other assets. Both the lettings are happening together and I am getting one rent. See, both the lettings are happening. Building along with other assets. Building along with other assets, and one rental income is coming. That rental income, my dear friends, this rental income is what? This rental income is combined rent. This rental income is combined rent. So this combined rent will not be separated. Will not be, because the lettings were inseparable. And if the lettings were inseparable, I am not supposed to separate this rent. Some rent for building, some rent for asset. No, I am not supposed to do it. Full amount of rent I will charge under the head PGBP. If my business is to give these type of assets together on rent. If I am not in the business of giving these type of assets on rent together, then the amount cannot be taxed under the head PGBP. It will be taxed under the head IFOS. Hello, sir. Are you understanding? Now, color, green color. Color, green color. Note. First, rental income. Rental income from letting out. Letting out what? Letting out open or vacant plot of land. Plot of land. Or rental income from subletting a building. Can I earn rental income by letting out plot of land? Yes. Under the head house property only, I have explained. Plot of land is not a house property. So the rent of this plot cannot be charged under the head house property. It will be taxable as my income under the head IFOS. Why? Is it my income? Yes. Is it covered by specific charge? No. Is it exempt? No. So it will be taxable under the head IFOS only, because it cannot be taxed under any of the earlier 4 heads of income. Subletting. I have a building which is not mine. I am not the owner of that building. I have taken the building on rent. And now that building I am giving on rent to someone else. So am I giving the building on rent? Yes. Which I have already taken on rent. Yes or no? So am I the owner or I am the tenant? Tenant is giving the building on rent to someone else. So it is known as subletting. This is known as subletting. Main letting was done by owner to me. That was main letting. And after that, whatever letting happens, that is known as subletting. Subletting will be done by the owner or it will be done by tenant. It will be done by tenant. So if the tenant has sublet the building, is he the owner of that building? No. So for him, whatever rental income will come will not be house property income, because he is not the owner. It will be IFOS, or it can be PGBP also. Yes or no? If the business is subletting. But normally the subletting is not business, then it will be taxable under the head IFOS. This and this will be taxable. This and this will be taxable as per section 56(1). Getting my point, sir? So this was your rental income. 1, 2, 3, 4. Everything covered. Key man insurance policy, don't ask me also. Why? Already explained the entire point with PGBP chapter only. Yes or no? So pay attention. Point number 6 and 7. Then after that, point number 7. No, point number 8. Any sum received, including bonus, if any, under the key man insurance policy, will be taxable under the head IFOS only, specific charge. But if it is not taxable under the head salaries or PGBP, or it can be taxed under salaries also. Yes or no? It can be taxed under the head PGBP also. Can you charge it under the head salary or PGBP? No. So it will be charged under the head IFOS only. Will you remember? Color, black color. Now color, pink color will come. Which color? Pink color is for? Yes. So there will be some exemption which I am going to discuss over here. Okay. Pay attention. It is about a note. Now in this note, what am I going to do? Any sum received under a life insurance policy. Life insurance policy means normal life insurance policy. Now I am not talking about key man insurance policy. I am talking about a normal life insurance policy. As what? Death benefit. As death benefit or maturity proceeds. Death benefit on the death of the insured person, and maturity proceeds on maturity of policy. Yes or no? Death benefit on the death of the insured person will be given to insured person. Yes or no? Yes or no? Death benefit will be given to on the death of the insured person. The death benefit will be given to insured person, no? Or his nominees. For those nominees, the death benefit will be fully exempt. 1010D, D for death. 1010D, yes or no? And if the insured person does not die during the term of the policy, if the insured person does not die, then the amount will be given to insured person only as maturity proceeds. Even that maturity proceeds will also be fully exempt under the same section 1010D, subject to conditions. Ting ting ting. Hello, subject to. So can I say any sum received under life insurance policy has death benefit by nominees or legal years, or maturity proceeds by insured person, the person who has taken that policy. Yes or no? So this as well as this, both are exempt. So this is exempt, fully exempt. Under which section? 1010D. And sir, this is also fully exempt. Sir, this is also fully exempt, but the exemption will be available only if the following condition is now pay attention. Only if premium paid on that policy, premium, which premium? Annual premium. First of all, let me write only if annual premium of that policy is less than equal to 20% of capital sum assured. Yes or no? If the policy was taken between this date, 1st April 2003 to 31st March 2012, if the annual premium of the policy is 20% or less, if the policy was taken between this period, and if the policy, annual premium should be less than equal to 10% of capital sum assured, if the policy was taken between 1st April 2012 to 31st March 2013, and annual premium should be less than equal to 10% of capital sum assured in case of normal person. In case of normal person, less than equal to 15% of capital sum assured in case of handicaps. Handicaps means person suffering with disabilities specified under section 80U, or the persons who are suffering from specified ailments which are prescribed in 80DD. 80DD. Yes or no? Hello? 80DDB. 80DDB. So, the person who is suffering from disabilities, specified disabilities given in 80U, and the person might also suffer from specified ailments, specified disease, specified under section 80DDB. For that person, the policy premium should not be more than 15%. And for others, it was 10% only. and it will remain 10%. If the policy is taken on or after 1st of April 2013 and onwards. Now, last year there has been one amendment here. Last year there has been an amendment here. As per that amendment, less than equal to 10% or less than equal to 15%, as the case may be, that remains same. Of what? Of capital sum assured, and now the monetary limit is also fixed, and aggregate premium, what did I say? Aggregate premium on that policy should not be more than 5 lakhs. Should not be more than, if the policy is taken on or after 1st of April 2023. 1st of April 2023. See, earlier there was no monetary limit on the amount of premium paid. Only the percentage limit you are supposed to see. If the policy is taken for 10 crores, how much? So what is the 10% of 10 crores? 10 lakhs. Sorry, 1 crore. So if the yearly premium is 1 crore or less, the amount will be exempt. The maturity proceeds will be exempt. Yes or no? Why? Because the capital sum assured was 10 crores. 10% of that 1 crore, and the annual premium for this policy paid every year is what? 1 crore or less, 1 crore or less, 1 crore or less. Every year the premium paid is within the limit of 10%. Hence, whenever the maturity proceeds will come for this policy, it will be fully exempt. What if the policy amount was 80 lakhs? Capital sum assured was 80 lakhs. 10% of that 8 lakhs. So every year, if 8 lakh or less premium was paid, then the maturity proceeds of that policy was fully exempt. There was no monetary limit on the amount of premium to be paid. Monetary limit they have brought from 1st April 2023. Now, any policy which is issued on or after 1st April 2023, number 1, its annual premium should be within the limit of 10% or 15%, as well as that annual premium should not be more than 5 lakhs in aggregate. Getting my point? If one policy is taken, then aggregate is 5 lakh. If multiple policies are taken, then aggregate of all such multiple policies, aggregate premium of all such multiple policies will not be more than 5 lakhs. Getting my point? So now tell me, are you an assessee? Yes. Are you receiving any sum under the life insurance policy? Yes. That sum is received as death benefit. That sum is received as fully exempt under section 1010D. No condition. No condition. But if the policy is matured, if the policy is, so sum is received, see, this sum can be received including bonus if any, including bonus if any. So the sum can come with bonus also. So whatever sum which you are receiving from life insurance policy as what? As maturity proceeds, even that amount is fully exempt under section 1010D. But for that you will have to check this condition, that today you are getting maturity proceeds from a life insurance policy. That life insurance policy was taken between 1st April 2003 to 31st March 2012. For that policy, every year how much premium you have paid? 20% or less of capital sum assured. So every year the annual premium paid by you on that policy was 20% or less, 20% or less, 20% or less. Then today whatever maturity proceeds you are getting will be fully exempt. But what if the policy was taken on or after 1st April 2012, but on or before 31st March 2013? On that policy, the annual premium should not be more than 10% of capital sum assured. Here for normal person also the same limit, handicap person also same limit, normal person also same limit, handicap person also same limit. If the policy is taken on or after 1st April 2013, then for normal person the limit remains 10%. But for handicap person, if the policy was taken, then the limit will become 15%. Will you remember this? So annual premium on that policy. Today you are getting maturity proceeds from a life insurance policy, and that life insurance policy was taken on or after 1st April 2013. Today you are getting maturity proceeds in 24-25. But the policy was taken on or after 1st April 2013. Every year, how much premium you have paid for that policy? 10% or 15%, as the case may be. Either that amount or less. 10 or 15 or less. 10 or 15 or less. Every year premium has been paid within this limit. Only then the maturity proceeds which you are receiving right now will be exempt. But wait, if the policy is taken on or after 1st April 2023, for that policy, now additionally a limit, monetary limit is also fixed, that whenever you will receive maturity proceeds of this policy, that maturity proceeds will be fully exempt only if the premium paid on such policies every year is within the 10 or 15% limit, as well as the total premium paid on such policies does not exceed 5 lakh rupees. Only then the maturity proceeds of those policies will be exempt. Yes or no? Now, this is the condition to take the exemption. This is the condition to take the exemption. Now tell me, if I say color, green color, why I am bringing green color, you should understand now. Now the amount will be taxable. Now the amount will be, no, I will bring black color. To be honest with you, I will bring black color because the amount will be taxable, not because of general charge, because of specific charge. So if the annual premiums, if the annual premiums paid in excess of above limits for any of the year during the term of the policy, then tell me, then sum, meaning maturity proceeds will be exempt or will not be exempt? Shall not be exempt under section 10(10)(d). Shall not be exempt. So, sir, if it is not exempt, then it is not exempt, then it will be taxable. So the maturity proceeds which will not be exempt under section 10(10)(d). Now that maturity proceeds will be brought under the head. Now this maturity proceeds will be brought under the head IFOS. But this entire maturity proceeds will not be taxable under the head IFOS. Out of this maturity proceeds you are going to reduce. What? Reduce the amount of premiums, because whatever maturity proceeds you are receiving is nothing but premiums for these many years which you have paid is coming back to you. That should not be treated as your income. Every year whatever premium you are paying, that gets accumulated and that is coming, and some extra amount is coming. So the premium which is coming back to you should not be treated as your income. Anything over and above that will be treated as your income. Yes or no? So the amount of premiums paid during the during the term of the policy, which was already claimed, which was not claimed, or not allowed under the Income Tax Act provisions. That amount will be reduced and the balance amount will be taxable under the head IFOS. There is a specific charge which has been brought last year only. Sir, the total premiums which you have paid are coming back. So all the premiums should be reduced? No. Because out of those premiums, every year some premium you would have claimed as a deduction under ATC. So that premium which you have already claimed under section ATC as a deduction is also coming back. That amount we are not going to reduce. We are going to reduce only that amount of the annual premiums which we did not allow you as a deduction under ATC. So out of the total maturity proceeds, what you are going to reduce? You are going to reduce only that premium which you have paid every year which was not allowed under section ATC. Don't reduce that premium which was already allowed under section ATC. Getting my point? Even that amount which was allowed under ATC is now coming back to you. We will be charging tax on that amount also. We are not going to reduce that. Understood? Will you remember this? Yes or no? Now wait. What did I say there? What did I say here? Point number 8. Color. Point number 8 says that amount received under Keyman insurance policy, including bonus, if any, that is taxable. But since we talked about what Keyman insurance policy, so with this, let's talk about the normal insurance policy also here. Don't consider this amount as a taxable amount under the head IFOS because this amount is exempt. So whenever you see this amount, it will be fully exempt. What amount? From your normal life insurance policy, whatever amount is coming, including bonus, that will be fully exempt. If it is death benefit or if it is maturity proceeds, if it is death benefit or if it is, yes or no, death benefit will be fully exempt under section 1010D without any condition. But maturity proceeds will be fully exempt under section 1010D subject to the payment of premium within limits. Subject to payment of premium within limits during the term of policy. Limits you have to remember with dates. Within these limits, if the premiums are paid every year, then only your maturity proceeds whenever you will receive will be exempt. But if for a single year also during the term of policy, for a single year also, if the premium paid was more than the limit, then the maturity proceeds will not be exempt. Then the maturity proceeds will be taxable. But full amount of maturity proceeds will not be taxable. Out of that amount, reduce what? The annual premiums which you have paid during the term of the policy, which was not allowed as a deduction under Income Tax Act. Only that premium you will reduce which was not allowed during the term of the policy. Yes or no? After reducing that amount, whatever maturity proceeds remain, this maturity proceeds will now be taxable under the head IFOS only. Specific charge. Hence, color, black color. Yes or no? Now I am picking up color, green color. Color. Again a taxable amount. Again a similar type of amount which is taxable, but because of general charge. Pay attention. This is note. What is the note, sir? Amount received as annuity, as sometimes also known as pension, under a life insurance policy. Sometimes these policies are also known as annuity policies. What policies? Annuity policies. So this type of policies give you two types of benefit. What? That the premiums which you are paying, because of that your life will be insured. But when the policy will mature, instead of getting a lump sum amount as maturity proceeds, you will start getting a regular payment in the form of pension, in the form of annuity. Yes or no? If you die, your family members will get death benefit. Hello? If you don't die, you will start getting pension. So can I say this is a type of life insurance policy on whose maturity you will not get a lump sum amount, you will start getting annuities, you will start getting regular payments in the form of pension. This amount which is received, nowhere exempted. No exemption is given for this amount. So what will you do with this? What will you do with this? This will be taxable under the head IFOS as per section 56(1), because it cannot be taxed under any other heads also. Got it, sir? Should I move ahead? So since we have had a discussion about pension, shall we discuss about other pensions also here only? Hello? Can you see the depth in which I am getting you? I am taking you. So this depth is actually required. See, we are discussing only this part. Okay? I would have told you this part and I would have gone. So then there was no point of me coming here. If this is taxable, so some doubt might also arise, no? That, sir, what if normal life insurance policy is there and from normal life insurance policy I am getting the amount? Exempt. If it is death benefit, if it is maturity. But policy is not a normal life insurance policy. It is annuity policy then, pension policy then. Then from that policy, amount will be received. But that amount, if it is death benefit, it is already covered above. Yes or no? But from this policy, you are not going to get any maturity proceeds in the form of lump sum. You are going to get pension. You are going to get a regular sum in the form of annuity, in the form of pension. That amount is your regular income. We are not going to exempt it. That will be fully taxable under the head IFOS because of general charge. Now, since we have had a discussion about one type of pension over here, so let's talk about other pensions also. Getting my point? Number one, color, green color, huh? I'm talking only about the pensions now. Now, note, pension from where the pensions can come? Come on, tell me. Pension from employer. Pension from can be given to employee or to employees' family on death of employee. Done, sir? This pension can be given from UTI or mutual fund. UTI or mutual funds, because you might have invested in pension plans, annuity plans of UTI or mutual fund. That is your investment. Yes or no? So sometimes instead of investing in pension plans of insurance company, you can invest in pension plans of UTI or mutual fund also. Yes or no? Now, pension from central government under the national pension scheme. NPS. Hmm. 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 Now tell me, what will you do? What will you do? Come on, tell me. If the pension is received from the employer by the, it will be taxable under the head salary. It is not going to come under the head IFOS. But if the pension is received by the family members of the deceased employee, pension is received from the employer, but the employer is giving the pension to the family members of the deceased employee, then it will be taxable. Then it will be under the head IFOS as per section 56 subsection 1 general charge. But a standard deduction under section 57 will also be available. How much? A or B? A or A is 1/3 of family pension, or B is 15,000, maximum 15,000, whichever is lower. But wait, this 15,000 will be applicable only if you don't follow 115 BSE. But if you follow 115 BSE, then the maximum limit will be 25,000. Yes or no? 115 BSE, tick mark. Done, sir. Now, what about the pension coming from UTI or mutual fund? What about the pension coming from UTI or mutual fund? What are you going to do with this? Pension coming from UTI or mutual fund, this is your income from your investment. This is also taxable under the head IFOS under section 56(1). Now pension is coming from government. Pension is coming from, now pay attention, government under NPS, National Pension Scheme. Copy and paste, duplicate. Now the government can give you pension, and that pension can be exempt also. That pension can be exempt also. Color, pink color. In green, if you see pink, then it means it is exempt pension. Yes or no? Now see, exempt pension I am talking here. I am talking about that here, exempt. If received by the awardee of gallantry awards, or his family members, then that will be fully exempt under section 10 subsection 18. And if received by the family members of, if received on the death of member of armed forces, during operational course of duties. During operational course of duties. If received on the death of the member of armed forces. Who has died? Member of armed forces. During his operational course of duties. If received by his family members, then this is also a family pension which will be fully exempt under section 10(19). So if these two types of pension, if you will see, it will be fully exempt. Other pensions can be taxable under the head IFOS, but one pension will always go to salary from employer if the employee is receiving. And what is the tax treatment given to that pension under the head salary? We have already seen it. Okay. Now if the pension is received under a life insurance policy, then also it is taxable. Mutual fund, UTI, then also it is taxable. And if it is coming from the government under the national pension scheme, then also it is taxable. Will you remember all these details? Yes or no? This is the end of, this is the, what I have pension and insurance. Done, sir? Done, sir? Now see, this entire discussion I have done with you. I have done with you. This discussion also I have done. Okay. Now, yes, this is also done. Any sum received including bonus, if any, under life insurance policy, other than sum received under ULIP or Keyman insurance policy, which is not exempt under section. Any sum received including bonus, if any, which is not exempt under section 10(10)(d), maturity proceeds, minus aggregate premium paid during the term of such policy to the extent not allowed under the Income Tax Act. That balance will be fully taxable under the head IFS. From last year onwards, this new income has been inserted in the specific charge. Clause 12. Yes or no? Now, this 2, 3 and this 4. Already I have discussed these points. Okay, you just have to read it. Okay. Now let's come to clause number 9. Clause number 9. See how many incomes we have covered? 8 incomes. And after 8 it is 9th. Advance money received and forfeited on or after 1st April 2014 on in the course of what? Negotiations. For what? For transfer of a capital asset, but no actual transfer takes place. Do you remember? So this will be taxable under the head IFOS. This will be taxable under the head IFOS. But you have to remember, if it was received and forfeited prior to 1st April 2014, then it will not be coming under the head IFOS. That will be adjusted as per section 51 under the head capital gains from the cost of your asset, when you will actually transfer that capital asset. Yesterday only we have had a discussion about this. Yes or no? So this was your next income. Then after this clause number 10, which talks about, which is very important, gift. I will just write gift. So gift can be sum of money also. Yes or no? Sum of money or Assets. Assets means properties. Which type of assets? Which type of properties? Specified movable assets or immovable properties. Yes or no? What are the specified movable assets? Do you remember this? PJ Das. Or immovable properties. Yes or no? Paintings, jewelry, drawings, artwork, archaeological collections, sculptures and shares or any immovable property. Now see, the assets or properties, in the hands of recipient, in the hands of, meaning the assessee, okay, no? In the hands of assessee, recipient, who is the assessee. Only these assets or properties will be considered which are capital asset in the hands of recipient. So when you receive it, they have to be your capital asset. You are receiving them as your capital asset. Only then the gift provisions will apply and the amount will be taxable under the head IFOS. But if you are receiving the assets as your stock in trade, then the gift provision will not apply. If you are receiving the asset which is not treated as your capital asset, then the gift provisions will not apply. You have to consider the amount of these assets as your gift under the head IFOS only if the asset received is a capital asset. For you also it has to be your capital asset, received as your capital asset. Getting my point, everyone? Hello? Next one, point number 11. I will, don't worry. All the incomes I have covered. But now I need to do special discussion about dividend, winnings, because all the other discussion in between I have done. I have completed everything. Yes or no? And the special discussion about gift. Only these three discussions are remaining. The chapter will be over. Yes or no? Since I have already completed 57, 58, 59 and 145. How is this head? Difficult? No. It is made easy. Say thank you. 11th number. 11th is, see, 11th one. Eleventh is compensation or other payment. Compensation or any other payment on termination or modification of employment contract. Employment contract. In the bracket I will write if could not be taxed under the head income from salary as profit in lieu of salary, then it will be taxable under the head IFOS. If your employer is giving you this amount, profit in lieu of salary, taxable under the head salary. Hello? But you are receiving it from someone else on behalf of your employer, someone else is giving you, then it cannot be your profit in lieu of salary, then it will be your income from other sources. Will you remember? This point I have already covered. Now tell me, out of all these incomes which I have written, 1 and 2 is remaining, 3rd is done, 4th is done, 5th is also done, then 6th, Sixth is also done. Seventh is also done. Then eighth is also done. Then ninth income is also done. And then 10th is remaining. 11th is done. And one more income here. This was your 12th income. This was your 12th income. Amount received on maturity of your life insurance policy will not be exempt under section 1010D if the annual premiums were not paid in limits. Yes or no? Then that amount will be treated as your IFOS income. But that entire amount will not be taxable. Out of that, some amount will be reduced. After reducing that amount, whatever amount remains will also be taxable only under the head. Color, black color. Specific charge. Color, green color. General charge. Color, pink color. Will you remember all these things? Now see, we have finished the entire list. We have finished the entire list of those incomes which are taxable only under the head. But while finishing that list, we covered few incomes which are taxable under the head IFOS because of general charge. Okay, no? Now pay attention. Few examples. Few more examples of incomes which are taxable under the head IFOS as per section 56(1) general charge. Few general charge income we have already covered, yes or no? But few more examples I will give. I will try to cover each and every income which is normally asked in the exam, which are going to charge under the head IFOS income. But see, whatever things I will write here is just a list. Examples. This is not the exhaustive list. Only these incomes will not be taxed under the head IFOS. These incomes will be taxed under the head IFOS, but apart from these incomes, other incomes might also be there. Because you cannot give an exhaustive list under the head IFOS. This is the residuary head. All the incomes will be covered. We can only give some examples. And I have tried to cover all the examples which are usually asked in the exam. But please pay attention, I am telling you again that apart from these incomes, other incomes might also be there which you can charge under the head IFOS because of general charge. Yes or no? Now, these examples. First one, can you see royalty income? Can you see royalty income? If the royalty cannot be charged under the head PGBP, you are a student, CA student, okay, no? You have written a book, Life of a CA student. So emotional, full heart you have poured in that book. What kind of problems a CA student faces, these long study hours, paper checking is not good, this, that. You have, poured your entire heart, life of a CA student. And you approached a publisher with your content. Publisher literally cried, seeing the book which you have written. And he has decided that he will print your book. Your book got printed. Now the publisher will give you some royalty also. Will it be taxable under the head PGBP for you? Or a professional author, professional writer? Chetan Bhagat you are? No, na? Then it will be your income, but will be taxable under the head IFOS, royalty income. Yes or no? Then remuneration from some person is giving you remuneration. By whatever name the remuneration can come. But the person giving you is not your employer. So the remuneration you are getting from a non-employer. For example, you are a college lecturer, so college is your employer. College is your, but university is giving you money. University is giving you remuneration. University is not your employer. Well, sir, why university will give me remuneration? Bloody, you are setting the papers for the university. You are checking the papers for the university. So paper setting fees, paper checking fees, you are getting from remuneration. You are getting from university as your remuneration. Are you getting remuneration? Yes. But from a person university who is not your employer. So remuneration from non-employer, will you charge under the head salary? You'll have to charge under the head IFOS. Hello? For example, I am a taxation expert, okay, working in some big organization. I have a vast experience of 20-25 years in the taxation area, income tax, GST. I have been practicing, or I have been working in the industry. Some college calls me to give a lecture, to deliver a lecture to their commerce students on the, different types of taxes, and share my knowledge on the taxation with the college students. Some MBA college calls me to deliver that lecture. They have arranged a seminar and they have invited me as a speaker. I will go and I will deliver that seminar. I will deliver that guest lecture. For that I will be paid honorarium. Honorarium means a payment which they will give me as a thank you for giving your valuable time and sharing your valuable knowledge with our students in the seminar, in the guest lecture. Yes or no? Sara sir goes to many colleges, different colleges. Yes or no? As a guest speaker, as a guest lecturer, to motivate the students and all, to share his profound knowledge with the students and with many of the faculties, etc. So that college, as a thank you, might give some honorarium. Honorarium is coming from a person who is not my employer. That remuneration is coming from a person who is not my employer. So it cannot be my salary income, not exempt. Hence it is taxable. Can you charge it under any of the earlier four heads? No. There is a specific charge? No. But still it will be taxable under the head IFOS because of general charge. Yes or no? Then insurance commission, which is received by any insurance agent. I am an insurance agent also. Along with my business activities, along with my professional activities, in my free time, I sell some insurance policies also. Being an insurance agent, this work is not done on a full-time basis by me. My business is not to earn commission on sale of policies. Yes or no? But side, I get some time in the course of my business, profession, employment. After doing all those activities, I get some spare time. In the spare time, I sell the policies of insurance company. On that, I get insurance commission as insurance agent. Is it my income? Yes. Taxable under the head IFOS because of general charge. Yes or no? Board meeting fees or sitting fees received by a director. There are two types of directors in a company: executive directors, non-executive directors. Executive directors are the employees of the company. They involved in the day-to-day activities of the company. Just like normal employees, they will come regularly, they will come every day to the company and work with the company. Like managing director is there, whole-time director is there. They are executive directors of the company. They get paid salary. And whenever they are in the board of directors, they will attend the board meeting. They are not going to get board meeting fees or sitting fees. It is given to other directors on the board who are non-executive directors. They will just come for board meetings. They will sit for board meetings. They will share their experience, their knowledge, so that the company can take decisions. So they will help the company in decision making by sharing their knowledge, by sharing their expertise. They are not involved in the day-to-day activities of the company. They are non-executive directors. So whenever they will come and they will attend the board meetings, they will sit in the board meetings, they are paid board meeting fees or sitting fees. For those non-executive directors, it is their income from other sources. Yes or no? Family pension I have already explained. Then this entire pension, commuted pension, yes, this one pension, no, I have forgot to write here. See, the pension which you are receiving from life insurance policy, okay? And if this pension is commuted, meaning instead of that regular amount, you take a lump sum amount. This is commuted. Then it will be fully exempted. Wait, let me change the color. Only then you will understand. If it is commuted, then it will be fully exempt under section 1010A. And if it is commuted and coming from LIC, Life Insurance Corporation. From LIC if it is coming, so the pension annuity was supposed to come from LIC and you got it commuted. So now the commuted pension is coming from LIC. That commuted pension from LIC will not be taxable, it will be exempt. But see, if LIC is giving you uncommuted pension, other insurance company giving you uncommuted pension, monthly pension, regular pension, then it will be taxable. But if you get it commuted and you receive a lump sum amount and that lump sum amount is coming from any insurance company, no, it is coming from LIC, then it will be fully exempt under section 1010A. Will you remember this? Yes or no? So this point I forgot to write, this I have covered. Okay, now central government, pension, individual awardee, I have already covered this, UTI mutual fund I have covered, I have also covered pension policies, I have also covered national pension scheme, everything I have covered. Yes, now this agricultural income. See, agricultural income from a land situated in India. Agricultural income from a land situated in fully exempt. 10 subsection 1. We are going to see that chapter. Just after this, I'll discuss that agricultural income also. Okay. Now, if the agricultural income is coming from a land situated, income is accrued outside India. If it is received in India, then Indian income. Taxable for all types of assessees, ROR, RNOR, NR, but taxable under the head IFOS. But if agriculture income is coming from a land situated outside India, meaning accrued outside India, and it is also received, will it be your Indian income or a foreign income? Part A or Part B? Part B, foreign income. If your ROR, only then taxable, RNOR or NR, then it will not be taxable. Yes or no? Wait. If your ROR, then it will be taxable under the head IFOS. Getting my point? But when an income can be treated as agricultural income, which is exempt under section 10 subsection 1, we are going to discuss about that. Okay, don't worry about this point. Next one, income or dividend from units of UTI or mutual fund, that I am going to cover with the discussion of dividend. Don't worry about that. Then income which is received by MP, MLA, MLC as salary. It will not be their salary, it will be their income from other sources. It will be their income from other sources. If that income is received by MP, MLA, MLC in the form of daily allowance or constituency allowance, then it will be fully exempt. But wait. This exemption not available if 115 BSE is followed. So don't follow 115 BSE and claim the exemption. But if you want to follow 115 BSE, then this exemption will not be available. Yes or no? Next one. If you receive some awards, from the government in public interest, like Bharat Ratna, then Padma Shri, Padma Bhushan, these are the awards which are given by the government in public interest. Major Dhyan Chand, Khel Ratna Puraskar, then Arjuna Award, yes or no? Then Dronacharya Award. These are few awards which are given by the government in public interest. So any award, any reward given by the government in the public interest, that will be fully exempt under section 1017A. Whether you see, wherever I am not writing all these things, no, there you have to understand that this exemption will be available even if you follow 115 BSE. Exemption under section 1015 for interest will be available whether you follow 115 BSE or you don't follow 115 BSE. Exemption for gratuity under section 1010 will be available whether you follow 115 BSE or you don't follow 115 BSE. So wherever the exemption is not available, that time I have pinpointed that this exemption will not be available if you follow 115 BSE. All the deductions are available wherever, whatever we have studied, all the deductions are available whether you follow 115 BSE or you don't follow 115 BSE. But in some deductions I have already pointed out that this deduction will not be available if you follow 115 BSE. Don't apply your mind. That, ayyo, what to do? I don't know what to do. Bloody, if you follow 115 BSc or you don't follow 115 BSc, this exemption is going to be available. Did I tell you that if you follow 115 BSc, you are not going to get this exemption? Then don't apply your mind. Take this exemption. But I have specifically told you that this exemption will be available only if you don't follow 115 BSc. If you follow 115 BSc, then forget about this. This will not be available. Hello, sir. Hello. Understanding? Hungry, no? Give me 5 minutes. Or you want a break just now? 5 minutes. 5 minutes. 5 minutes. I will complete. Okay. Okay. Now, any award? Any award received by the assessee from government? Any reward received by the assessee from the government in public interest, that will be fully exempt. But the award is received by a employee from the, it will be profit in lieu of salary, taxable under the head salary. If the award is received by any professional sportsman or athlete, it is in the course of his profession, it will be his taxable PGBP income. If the award or rewards are received in some other cases, then they are as good as your gift. As good as your gift. Something is received without consideration. Yes or no? Will be taxable under the head IFOS. Will you remember this? Now, income from an activity of owning and maintaining race horses, that is also taxable under the head IFOS. But I will be covering this activity with winnings income. With winnings, I will have a small discussion about this. And this note number 2, note number 1 will be covered with the winnings discussion. Yes or no? Now, section 57 comes. We have completed all the incomes. We have completed all the incomes. Now, the special discussion about dividend, winnings and gifts is remaining, which I will be doing, and the chapter will be over. Yes or no? Then immediately we are going to start with deductions and computation of total income. I hope you all have bought your ICI study mat. Yes or no? Because I am going to solve the question from ICI study mat only. Hello? Not brought, then don't worry. I will be showing on the screen. You will be aware. Okay? But while solving that, I will introduce the concept of agricultural income. While solving that, somewhere it is required that I have to speak about set off and carry forward. Then entire set off and carry forward I will discuss at that time. Yes or no? With speed. Because we don't have to waste our time in such cases. Getting my point? Clubbing also I will finish in that way. So once we are doing all these things now, deductions and computation of total income, with this, majority of the part which we have left will be covered, because there is no requirement of allotting special time for those things. Okay? So take a break for half an hour. Within half an hour we are meeting and we'll continue from here.